Good morning. It is a beautiful day here in Chicago, maybe a little cool. It was 75 and sunny yesterday. Today it is 55 and sunny. I'll take 75 and sunny over 55 just about any day of the week and twice on Sunday. So reminder, a couple of events going on. Till the 31st, this is going to be $47 using options to trade for direction. It's going to be an awesome course. Andrew and I have already kind of diced through what we're going to be doing. Totally worth it. You can also find a video replay of last Thursday's using option volatility to trade for direction video. Always a good time. So now let's talk about the market. Well, a pretty decent bag of data out today, and all relatively positive. You've got the S&P now strongly through that 100-day moving average. That 100-day moving average, you'll recall, is set right around 1961, and the 50-day, which was another resistance, 1966, strongly through both of those. There's your tone setter for the day. We've now broken a major alleged technical hurdle. We how at Option Pit we think technical is definitely more psychological than valuable, but it's good to know that we're breaking psychological barriers in one's trading. With that, take a quick look at the VIX. It's off 0.8%. It's now threatening that 15 level with the NOV and DEES contracts still moving in lockstep. And VXST, and this is interesting, still trading at a premium. Those two have been, VXST has been trading at a bit of a premium for a while. Now, why would that be happening? Well, today's the first day of a 2-day FOMC meeting, and that FOMC meeting is going to drive volatility. That should act as a floor for the VIX, at least for the next day or two. But as time passes, it may make things a little worse. I could see a scenario where, coming out of that Fed meeting, regardless of what they decide, we see a nice vol collapse. One interesting thing is that since the peak of the market, the bonds have sold off, but they're still holding up pretty well. So there's some belief that there's going to be some change in language that points toward, changes in rates, things like that. So keep that in mind when thinking about how to play this stuff, because I think the market is pricing in a rate change. All right, and that is an important thing to be aware of. The market is pricing in quite a certain, some sort of change in rate policy that is more dovish, not bullish, not bearish or hawkish. Decent spread between NOV and cash now. So that's starting to look interesting. It's just December continues to be kind of depressed. And that's because of the holiday season. So that's what we're seeing there. Now, where is there, opportunity? Well, Apple continues to take off. Alibaba continues to take off. Look at the move in Facebook. You want to see some ugliness, though, take a look at Twitter. Now, one of the things that we have been noticing has been the loved stock pattern. So keep an eye on that pattern. Now, what is the loved stock pattern? I like to call it the Amazon Netflix pattern. So you get a stock that gets smoked, and then over the next couple of days, after it gets smoked, people start loving it again and they start bidding it. All right, we saw that in Amazon, saw it in Netflix, and now I think that we are likely to see that in Twitter, which means I would bet in the next couple of days Twitter is back toward $44. So that might be something that we play in our loved stock pattern. Volatility in Twitter, and this is the other piece, is the overselling of implied vol. So that has been a nice play to play over the last couple of days, and one to keep an eye out for is that loved stock pattern. If that loved stock pattern keeps showing up, that might be a cycle. So think about other stocks that are loved that have earnings coming up, and that might be the way to play the pattern, is torch followed by rally. All right, folks, if you got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01, and I will talk to you guys soon.